Welcome back to the video, man. Achena and my wife.
Janiqua.
So 3 things you need to do before buying your first home.
That's right. First things first. If your goal is to just buy your dream home, then this may be one of the worst financial decisions that you will make. Why? Because more house equals more money. Now, for most people, more money will mean that you need to spend more time working, right? Invested in your job in order to acquire that money. So now you're going to have less time to actually spend in the home that you wanted to buy. Not only that, but you don't actually own the home until it's fully paid off. And in a lot of cases, you're going to be paying double or more the purchase price over the span of 30 years due to interest rates. This is a whole other video. And if you're interested in the logistics behind home ownership, be sure to like this video and comment home ownership down below. And if we have enough requests, we'll do a separate video.
That being said, your goal should be more than just buying a home to acquire more debt. Your goal should be determining how you can turn your home into an asset. An asset is something that is going to be putting some money in your pocket. A liability is something that's going to be taking money out of your pocket. So we don't want that, all right? An example of this would be buying a multifamily home where you rent out a portion and then you live in a portion of the property. With that, you're going to be collecting rent that's going to potentially cover your rent, so nothing will be coming out of your pocket. Everything will just be gravy on top. It just be extra.
For instance, guys, we've been living in our current home for about a year and 5 months now. And although our costs went up on paper, it didn't actually increase much in our account. Why? Because we rent out a portion of our home and we have other people paying our mortgage. So that's an example of an asset.
Now, an example of a liability would be a home that you purchased that you are unable to rent out or turn into an income producing asset. You just pay to live there, nothing else. So now each month you have money being drawn from your account rather than being deposited.
Okay, now once you have the vision and mentality of buying assets rather than liability, step 2 would be to assess whether or not you are financially qualified for a home. If you haven't checked out our latest videos on 3 ways to improve your finances in 2024, be sure to check that video out. We will add it somewhere in this video. But you definitely want to make sure that you have met all of the requirements for home ownership, such as having your last 2 years of W-2 statements, 1 month of pay stubs, 2 months bank statements, 2 years tax returns, decent credit, right? And we personally recommend at least 6 months worth of savings in order to cover your mortgage in the event that there's an emergency, such as not being able to go to work. And if you're someone who is like, how in the world I'm gonna save 6 months worth of mortgage when I'm basically practically living paycheck to paycheck, then you, my friend, need to learn how to invest your money rather than just simply saving your money. And if you are interested in learning more about that, you can comment invest below and we will create another video sharing like how we invest our money and what you can do to invest yours.
And last but not least, we're going to run the numbers, determine how much house we can afford, and begin the process of buying a home. Things to look for here: use a mortgage calculator if you can. It's not required, but it can be helpful. And then we want to look at the comps in the area of your choice. Look at the tax history. Has it been increasing, decreasing the past few years? And by how much? Next thing we want to look at is interest rate. If you have kids, you may want to consider crime in the area, school rating, and things such as that.
Okay, so there you have it. 3 things to do before buying your first home. Number 1,
write the vision. Make sure you are mentally prepared and educated on the decision.
Yes. Number 2, make sure that you meet the basic requirements of the bank that you're going to be borrowing from. and save at least 6 months worth of mortgage in case of emergencies.
Number 3, start the application process and run the numbers to determine how much home you can afford. All right, make sure you guys subscribe and like and share this with 10 other people and ask them to share with 10 other people to spread this message and help more people around the world.
Yes, because the goal is less liabilities and more income producing assets.